Okay. It is 11 o'clock. So, good morning, everybody. Welcome to today's webinar hosted by United Capital Securities Limited. My name is Ibiyinka Ibru. I am a certified financial education instructor, and I'm the founder of Money Start, and I will be the moderator for today's session. So today's webinar is titled Banking on the Future, Understanding Rights Issues and Public Offers. And it's part of United Capital's ongoing commitment to providing their clients, investors, and you, the public, with knowledge and tools needed to navigate the evolving financial landscape. So this event is particularly timely because the Central Bank of Nigeria has recently mandated banks to recapitalize through rights issues and public offers. So in case you're one of the many people who is wondering why it seems like Nigerian banks won't leave you alone with constant communications and ads to buy shares, or if you're already an investor and you want to find out more about why this is happening now, if it's a good thing or a bad thing, if your money is safe in these banks, or if it's something that you should consider pursuing, this is a webinar for you. So our goal today is to demystify all these concepts and give you a deeper understanding of how you can take advantage of these opportunities. With insights from industry experts, who I will soon introduce, we're going to bridge the gap, the knowledge gap, and empower you with the confidence to make informed investment decisions in this time, okay? So there are a few housekeeping rules. Before we begin, the call is recorded for quality and training purposes, so just please keep that in mind. Everybody on this call, on Zoom, on YouTube, you're in listen-only mode. So that means if you speak, we can't hear you. And this is just to minimize background noise and disruptions. You want this to be a good experience for everybody. But don't worry, your voice will still be heard in other ways. So if you have questions or comments during the session, you can use the question and answer box on Zoom, or if you're on YouTube, just add a comment under the live stream. So submit your questions as soon as they come to mind, and we'll address all of the questions in the question and answer segments, at the end. Okay, so let's move on to introducing our very distinguished speakers who bring with them a wealth of knowledge and expertise to today's discussion. First of all, we have our guest speaker, Mr. Jude Chiemeka, who is the CEO of the Nigerian Exchange. He brings extensive experience in capital markets, having played a crucial role in developing Nigeria's exchange landscape. As the CEO of the Nigerian Exchange, he has been instrumental in driving strategic initiatives to enhance the market's efficiency and growth. And today he's going to provide us with insights from the perspective of the regulator and the broader implications of the rights issues on the markets. Next, we have Dr. Catherine Nwosu, who is the CEO of Africa Prudential. She's a seasoned expert in the registrar services sector, leading Africa Prudential in providing innovative solutions that simplify investor engagement. Her expertise in managing large-scale public offers makes her the ideal speaker to discuss the practical aspects of right issues from the registrar's point of view. Then we have Dr. Gbadebo Aderele, who is the managing director of United Capital Investment Banking. Very serious people. He's a veteran in investment banking with a deep understanding of corporate finance, especially in structuring and executing capital raising activities. So his insights today will center around the role of investment banks as issuing houses and their strategic importance of the right issues for corporate growth. Then we have Mr. Abedin Alade, who is the head trader at United Capital Securities. So with his extensive experience in securities trading, Mr. Alade is going to shed light on how rights issues and public offers are perceived in the trading community. His perspective is invaluable in understanding the market dynamics, investor behavior in response to these financial instruments. And then last but not least, we have myself, your moderator, Ibiyinka Ibru. I am a certified personal finance educator and coach. I am the CEO of a company called Money Start, which is a platform built to develop intentional wealth building in millennials and Gen Zs. So as you can see, we're in great hands. We have all the experts here, so we're ready to get started. Thank you once again for joining us, and thank you to United Capital for organizing. So we're going to get started with opening remarks from Mr. Banwo Orisejafo, the CEO of United Capital Securities. So Mr. Bao, over to you.
Thank you very much, Ibiyinka. Good morning, everyone, and welcome to our webinar on the banking sector recapitalization exercise. It is a pleasure to have you all join us today. As you are all aware, the Central Bank of Nigeria has mandated a recapitalization exercise for Nigerian banks, requiring them to increase their minimum paid-up capital to a specified amount and within a specified time frame as well. For the international banks, they've been mandated by the CBN to come up with a minimum capital of 500 billion naira. For the national banks, their capital requirement by CBN is 200 billion naira. And then we have the third bucket, which is the merchant and regional banks. Their own capital requirement is 50 billion naira. Also, the banks are expected to complete this recapitalization exercise by March 2025. The banks are also mandated to raise the necessary capital between April 2024 to March 2025 as well, typically through rights issues or public offers. And indeed, some of the banks have started raising that already. I'm sure we've seen a lot of publications require investors to come and subscribe to their rights of public offer. So that process has commenced indeed. Well, for us here, we are here to discuss a significant development in our financial sector. We recognize that the terms right issues and public offers can seem complex and somewhat intimidating, especially for those who are not deeply entrenched in the financial world. There is often a knowledge gap amongst investors regarding what this term means and how they work and the opportunities they present. The webinar is designed to bridge this gap. Throughout this session, we will provide you with a comprehensive understanding of the recapitalization exercise, breaking down these terms and processes into digestible insights. Our goal is to equip you with the knowledge you need to confidently participate in these financial opportunities and to understand the potential benefits they can bring to you as investors, both old and young. By the end of this webinar, you will have a clearer understanding of how the recapitalization exercise process works, why it is happening, and how you can leverage it to your own advantage. We hope that this newfound clarity will empower you to make informed decisions and fully participate in this crucial exercise. Thank you once for joining us today. We look forward to an engaging and informative session.
Thank you, Mr. Orisha Jaffor, for that wonderful opening remarks. I think that's really set the scene for everything we're going to do today. So next we have our guest speaker, Mr. Jude Chiemeka, who is the CEO of the Nigerian Exchange. So he's just going to be speaking to us for the next 10 to 15 minutes about the government's objectives with the recapitalizations, the role of the Nigerian Exchange, and benefits to investors. So without wasting more time, Mr. Chiemeka, over to you.
All right. Good morning, distinguished ladies and gentlemen. Thanks, Bianca. First, let me start by thanking United Capital Securities for organizing this webinar, which I think is really timely, given what is going on. And also to thank them for inviting the Exchange to be part of this event. At the Exchange, we're always delighted to be part of any engagement that will help investors have a deeper knowledge of the market and take advantage of all the various opportunities the market presents. Now to the topic of the day, banking on the future around public offers and rights issue. So if you think about what the government objective is, just given by what the CEO of United Capital Securities said earlier around the directive from Central Bank to ask banks to recapitalize. If you just think about it from a simple line metrics, so 25 billion devaluations have occurred, there's inflation. And so how will these banks be able to mitigate against bad loans and the likes? And so they need to have a lot more capital to be able to, one, be in a position to lend more to the larger economy, two, to maintain resilience in terms of bad loans and provisions for things like that. And more importantly, to also gain confidence, especially in the part of international investors who invest in our market. Because if the financial system is not stable, then it poses a systemic risk, and you won't be able to attract the level of investors from the international community. And so when the government made that pronouncement and gave the banks 2 years to be able to capitalize the operation, segregating it from the national and those that want to play internationally, I am of the view that even this capitalization exercise that is currently going will still not be sufficient given the trajectory of a $1 trillion economy that Mr. President has already rolled out. Because if you think about the banks, 500 billion is still less than $500 million. So there's a need to even have more capital. But to the point of the objective is really to be able to stabilize the financial system, create more opportunities for the banks to be able to lend more, create new line of businesses, and generally grow the economy. In terms of the overview of rights, so when you hear of rights issues, it's really a process whereby companies are providing opportunities to existing shareholders to be able to invest more or take on more shares in their company at most times at a discounted price to the current market price, and it's really done without any commission or regulatory fees. So as an existing shareholder, when you hear of rights issuance, they're saying your company is going to give you a right based on your current holding to be able to buy more shares in that company. Typically, obviously, the proceeds of that will go to the company. But when you hear of public offers, it's typically for everyone, both existing shareholders and also new shareholders. And that's really the distinction between the two. In any ways, it will be cheaper for you as an investor if you think about the costs of buying from the secondary market. So when it's a right issuance or a public offer, the purchase is usually done without commission. So it's always very encouraging for you to take up your rights. From the role of the NGX, what the NGX is doing here is really to help galvanize the whole process. First, utilizing technology to digitize the whole process so that the investors are able to invest freely without any encumbrance. You can pick up your mobile phone and you're done in 2 minutes. So all those days of signing all kinds of paper, moving from one stockbroking firm to the other just to participate in an offer, those days are gone because of the digital process the NGX is bringing. And the second one is really around regulation. So a fair and orderly market is really what we strive to build. And that also engenders confidence, not just from the local investors, but also from international investors, as the NGX is a member of the World Federation of Exchanges. And we are really committed to creating an environment that will allow investors, both local and international, to utilize our market. So we are very concerned about the rules of engagement. And so the trading license holders are well regulated, and the issuers themselves are also well regulated to ensure that the capital that is being raised is going to be utilized for what it is being sought for. The second element really around our role is secondary market trading. So when you finish all this offering and then you then need liquidity, how do you go about it? So there's a strong secondary market on the back of all of this. So if you participated in these offers, both rights and public offers, and you need money in future, you'll be able to sell through your trading license holder. We have so far traded over $1 billion worth of shares on the secondary market side. So you shouldn't be afraid that you buy and you're stuck with it. No, you have a secondary market, a very robust secondary market that will be able to give you liquidity when you do desire to sell your shares. Just in terms of the ability of all these companies, banks, because rights issuance is not limited to the banks, but for the purpose of discussion today, in terms of the ability of the exchange, to provide a platform for these banks to be able to raise capital. The exchange itself is a multi-asset exchange. So we do have other asset classes other than the equities that exchange trades. We have fixed income, we have ETFs, derivatives, and exchange traded products. We have the second largest ETF market in Africa, second to South Africa. So the exchange year to date has been able to facilitate the raise of 5.7 trillion naira across different asset classes. And if you think about how much these banks are trying to raise to augment the share capital is really less than 5 trillion. So the exchange is a viable platform for them to be able to raise this capital they are looking to raise. Now, the last point really is around, so what is the benefit to the investor? Why will you participate in these offerings? So for an existing investor, rights issue presents you an opportunity to be able to buy into your company, increase your stake in that company so that you're not diluted out. And at the same time, you're able to do it at most times at a discount to the current market price. You're getting the shares cheaper. And there's also rights trading. The exchange is able to facilitate trading in the rights. And so if you do not want to take up your rights, it also affords you the opportunity to be able to sell your rights to an investor that wants to pick up your rights and then pay for those shares. So you're able to at least take advantage of your rights and monetize it for your own benefits. In terms of the public offering in itself, it provides you opportunity also to build a viable portfolio. You think about the share price of these banks, where they are today, given their current share capital, and then they're able to raise, and I believe they will be able to raise that capital for national banks, 500 billion, for international banks, 500 billion. And a bank now has 500 billion from, say, 120 or 130 billion. So they have access to more money. They will make more acquisitions. They will build out their businesses. They will invest in technology. And so that entity will be a lot more profitable. So a bank that is posting a revenue of 100 billion is likely to post double that. And therefore, dividend payments or to investors will be much larger than what they currently pay. So you stand an advantage of receiving more benefits for your investment. And then what that will do for you is to also help you grow your wealth in a systemic manner. As the economy grows, the banks grow, your wealth is also secured. And that is a huge benefit for you. I've talked about the liquidity, so you can always sell your shares. But I think that it's important to participate in these offerings because we see the current share prices of these banks trading far more than what they're currently trading because of the capital that they raise and the profitability that this exercise will throw out. But having said all of this, I'd like you to also participate actively in the question and answer session, just to ensure that you haven't missed out on anything. But it's a good thing that United Capital is having this session. And we commend their efforts and thank you for inviting us to be part of it. Thanks, everyone. And over to you, moderator.
Wow. Thank you, Mr. Chiemeka, for that address. That has definitely provided a lot of clarity and defined a lot of major themes around the recapitalization, especially around the benefits to investors. So I think that things are clearer now for a lot of people. But like you said, I want to dig a little deeper into this. So I want to turn over now to our distinguished panelists with more questions, since Mr. Chiemeka has very nicely set the stage for us. So the first question is for Dr. Gbadebo Aderele, who, as you would remember, is the MD of United Capital Investment Banking. So Dr. Aderele, as an investment banking expert who has been supporting commercial banks during this recapitalization exercise, can you share more about your own role in guiding these institutions through their capital raising? Specifically, how have you been able to determine what the best structure is for the rights issues and the public offers? How do you decide what price it should be and how to manage the market's expectations?
Okay, thank you very much, Bianca, and thank you very much to Mr. Bawa Oshoga for MD United Capital Securities for putting this together, and thanks also to Mr. Jude Chiemeka. I think you've already covered a lot in your earlier comments. But yeah, specifically to the question you asked around how we as investment bankers and in United Capital Investment Banking business, how do we support these commercial banks? I think a lot has been said in terms of why the banks have come to the market or why they have to come to the market. A number of banks have already come out with one offer or the other. And one of the banks we're actually advising on, FCMB, is actually closing the offer today. So if you are a shareholder, if you're interested in that offer, please take the opportunity. And a lot more are still coming out to the market to raise capital. But how do we work with these banks? The process of capital raising, it's not rocket science. It's not a difficult process. It's a market, as you have seen. The NGX is a secondary market, like we mentioned, but also this process of issuing securities or these banks coming to raise capital is a primary market. If you heard Jude speak earlier, he talked about the secondary market where you can easily sell your shares subsequently. But in this primary market where these banks are coming to raise capital, what we support them in doing first is there's a regulatory field. There's a lot of regulators that they need to meet their requirements. One, for example, the banks themselves need to have the no objection or what you call the approval of the CBN itself. Their own main regulator is the Central Bank of Nigeria. Yes, the central bank itself has provided guidance to say go and raise capital, 500 for international banks, 200 for national banks, and then regional banks and all of that. But still, each bank still needs to get its approval from the central bank. So that's one end. But the apex regulator of the capital market is the Securities and Exchange Commission. And that's where we come in a whole lot as well to ensure that the rules of the Securities and Exchange Commission are met. And it's the Securities and Exchange Commission that would give an approval for these offers to be opened. Of course, the NGX also has its own process, because at the end of the day, we also have to get those clearances from the NGX as well. And on these companies and Corporate Affairs Commission, actually, which is the Companies House, the lawyers also have to work with the companies to ensure that all their legal documents, all their filings, all their documentations are in place. Now, these are all key parts of the work we do, because we work with other advisors as well. Yes, the investment bankers would work with lawyers, registrars, stockbrokers, reporting accountants where required, to ensure that the documentation that you all see, those documents that end up coming to members of the public and also to existing shareholders. So, for example, like Jude explained, if it's the rights issue, we have a rights circular. That rights circular will contain information about the company. It also contains information about what the company wants to use these funds they're looking to raise to do. So you're always advised to make sure you read through those documents, or get your financial advisor or your accountant or any professional to guide you in going through what those documents are. Now, the work we do is work with those banks in ensuring that those documents reflect what they want to do, and so rights circular for rights issues, for a public offer to be a prospectus. The key information that will be in those documents will be information on the companies themselves, their governance, their board, their management, the operations of the business, where they are present, and then what they want to do. Part of perhaps the most important information is how they want to use the money that they're looking to raise, right? And we'll support them in that process. You also mentioned around key things around pricing, around pricing. How do you determine the price? Perhaps that's one of the most important things we do in that process, ensuring that we can identify the right price, the appropriate price. Let's put it that way, so that we don't mix up rights issue versus public offer. As we mentioned, yes, we've talked about public offers and we talked about rights issues, but indeed, you could also have an initial public offer in this process as well, where a private bank can actually be coming out to do a first public offer of its sense. Of course, it's still the same thing in terms of they are now issuing their shares to members of the public who want to take up shares. The process of determining the price, especially when a number of these banks are already public companies, a lot of it we need to still ensure that, there's some fundamental approach to ensuring that we find what's the right approach, what's the appropriate price for them. But some of the guidance would follow what the trading price of those shares are, right? But again, like Jude mentioned, what is typical is that when you have a rights issue, there's normally a discount. A rights issue is to existing shareholders, and you want to encourage those existing shareholders to take on their shares. If they take the proportionate amount of their shares, whatever is given to them gives them the same ratio of their holding in the bank, right? But the rights price is normally, lower than is expected to be lower than what the trading price is. Normally, the public offer would not follow that approach, but again, there's a process in trying to ensure that we get the appropriate pricing done for that. What we also try to do is, working with these banks, they also engage at their shareholders or their target market. You try to engage to see, you take their information and showcase to the market to say, this is what this bank has done in the last 5 years. This is how their businesses have performed. This is how they've expanded across Nigeria, across Africa, across the world. And this is, whilst the past is something to note, it is no predictor of the future. And you will now say, this is what they're looking at doing in the future. And it's now for investors to take a call to say, this information we're getting on these banks, how do we process this information, and how do we, position to be part of the story going forward? Although we must say, and I must say, I can't help myself right now, a lot of Nigerian banks are actually cheap, if you ask us, when you compare them to their international peers, we compare them to even peers from a continental perspective, right? And the number of Nigerian banks are actually they're beyond Nigerian, right? Because they are actually present in a number of countries across Africa, right? So being based in Nigeria doesn't just make them Nigerian banks. And I guess that's why some of them have international licenses, they have international licenses. But I think the summary of that is that those banks are relatively cheap across board. And we see a lot of international investors also looking at it from that perspective to say, these banks really look cheap from a valuation perspective. But nonetheless, we still need to guide them within the framework of the pricing, how their stocks have traded within Nigerian markets. And actually, that would now be something that investors now look at, put shareholders and new investors look at, and see the extent to which they can take up those shares. I think if I missed any other part of the question, please let me know. But I think yeah.
You didn't, Dr. Aderele. Thank you so much. That was a very, very well-rounded answer. And from what you said, it's very clear that the investment banks, United Capital, are integral to this whole process. But there is another part of this ecosystem, which is why I'm now going to turn over to our other panelist, Dr. Catherine Nwosu, who is the CEO of Africa Prudential. So Dr. Nwosu, it sounds like, the investment banks are doing everything from what Dr. Aderele has said. So can you please let us know, explain to us what role do the registrars like Africa Prudential play in the rights issues and public offers? How do you manage and handle the complexities of shareholder data, ensuring that the transactions are smooth during all these capital raising exercises?
Thank you very much, moderator. Good morning, everyone. And I want to join the other panelists to appreciate United Capital for putting this together. I'll say that Nigeria is on the march again, because around 2003, 2004, we had similar experience. But speaking to the question, a registrar is a data management professional, right? You have registrar in the universities, that's the educational sector. But speaking specifically to our industry, which is the capital market, a registrar is that data management professionals who handles the collation of data of investors, creates them into a register of members, maintains and updates this register of members on daily basis, and supports the issuers in their corporate actions. They also handle payments. So the registrar is the liaison between the investors and the clients, as well as other capital market operators. Of shares is one of the major decisions that companies take, right? And such decisions must be approved by the existing shareholders. So the registrar plays a key role here. The registrars work with the issuers to prepare for their corporate meetings, especially the annual general meeting, where it is expected that the company that intends to raise capital will put it as one of their resolutions to be approved at the annual general meeting. If it is approved, the company can go ahead with that process. If the company did not include it for approval during the annual general meeting, the company also has the opportunity to conduct an extraordinary general meeting where they will present this capital raise to investors to approve. So if shareholders approve, they will now go ahead and the work of the registrar continues, right? So I'm going to bucket what the registrar do in three separate buckets, okay? First is the pre-offer, before the offer, after this has been approved by shareholders at the meeting. During the offer, the registrar has a role, and then after the offer as well, the registrar's role continues. All right, so pre-offer, the registrar will have to communicate to the shareholders whatever the board have decided that they want to do. If it is a private placement, if it is a public offer, if it is a rights issue, the registrar have to do some level of communication in this regard to the existing shareholders, bringing them to speed that, come, this thing that you have approved, the company is now ready to bring it on board for you to buy. If it is rights issue, then it's for the existing shareholders of the company. If it's a public offer, it's available to everyone to buy. Okay, so there are documentations that will be prepared. Dr. Gbadebo spoke about the preparation of the documents for approval and all that. So the registrar also contributes to information that you have in this particular document, right? So the registrar will also handle the dispatch of these documents to investors, whether publishing them using digital platform or through text messages, or where in extreme case the company still wishes to send hard copy documents, because we know that everybody is not tech savvy. So to carry everybody along, companies do certain level of hard copy dispatch to investors. Okay, so when the offer opens, registrars keep engaging investors so that they will know this is the timeline, reminding them. Dr. Gbadebo reminded people that FCMB is closing today. So registrars also do that through maybe constant communication. We have morning news that we send to investors. So through different channels, we update them of what is going on. And the collation of the offer documentation is done by the registrar. Today, we are having offers through digital channels, and the registrar will have to see on daily basis the progress of the offer. Every other party in the transaction will also want to know how the offer is progressing, right? Before the offer closes, they should know whether they are meeting up their target. If they are not meeting up their target, of course, the issuing house will have to discuss it with the client. They might go back to the regulators to seek for extension, so that at least they'll give themselves another opportunity to see if further engagement will enable others that are yet to subscribe to their shares to do so. When the offer closes, it's also the duty of the registrar to make sure that the information that will be required by the issuing house to take to the regulator and get approval for the offer is readily available. So during the offer, people subscribe. You find out that all may not go as smoothly as expected. Let me give, for instance, an investor is investing in his personal name, but he's paying through his company. So there is need to look at the payment to tie it to the application of this particular investor to make sure that by the time the offer closes, you will not have reconciliation issues. So the registrar is seriously involved in ensuring that the applications are supported by payment, so that when the offer closes, the reports are available, they are sent to the regulator for approval. Then after the offer, when the approval is finally received, the registrar will also send this information of shareholders approved to the depository. Today, most of the offers are passing through the Central Securities Clearing System. So we have a portal through which we exchange data with CSCS. So the approved offer is imputed and sent to the depository so that shareholders are credited. The registrar also has the responsibility of advising investors of the outcome of their application. What was allotted to this particular investor, and if there is return money where the offer is oversubscribed, the registrar will also handle the returning of this money to the investors. So in all, from the beginning of the offer to the end of the offer, the registrar is there. And importantly, the registrar is the only party who continues to manage these shareholders after the completion of the offer. So the importance of the registrar in this entire process cannot be overemphasized. Thank you.
It definitely cannot. Thank you very much, Dr. Owusu. It's very good to know. It's very comforting to know that there's a registrar there looking out for the best, looking out for the investors' best, essentially, and knowing that all of our information and all of our data is safe. So I will now turn to Mr. Abidin Alade, who's the head trader at United Capital Securities. So, Mr. Alade, you're the head trader, so you have a full view of all the market dynamics, how people and investors have been behaving. So can you share with us any trends that you've seen? Would you say, or how would you say, that the rights issues and public offers are affecting market conditions, especially stock prices?
Thank you very much, Ibiyinka, and good morning, everyone on the call. I think first and foremost, I need to re-echo the sentiments of Mr. Jude Chiamaka that the ongoing capital raise has significant bearing on the immediate future of the immediate and the future aspects of our banking industry, and to a certain degree also the capital markets, given the impact of the banking sector on the entire capital market capitalization and the number of activities that we do on the floor on the daily basis. Speaking of the impact, I think so far so good, it's been positive. We've had 5 of us in the markets. We've seen Fidelity Bank, Access Bank, GT Bank, Zenith Bank, and FCMB come to the markets, and they've been mostly positive, although we are yet to get the official position of this offering from the SEC. 3 has closed. Fidelity, Access, and GT Bank have closed already. Dr. Aderele mentioned earlier on that FCMB is closing today, and I think Zenith Bank should be closing very soon as well. And so far so good. Investors they've received these offers positively. Dr. Jude Chiamaka also mentioned the advantages that these offers that they portend for the investors, both for the right issue when you're looking at the existing shareholders, and also the public offers when you're looking at the one targeted at new shareholders coming into the market. So I won't dwell much on that. But for the market itself, it has helped rejuvenate the primary market aspect of our capital markets, which before now has been somehow some sort dormant due to paucity of primary market issuance in the market. That has changed, and we hope that continues into the future. For the secondary market, the hope is that at the end of this capital raise, the market will have a bigger and much healthier banking industry, and this can only be positive for the secondary market, given the number of activities that we see from this particular sector on a daily basis and what it contributes to the entire market capitalization. This can only be positive for price stability and also investors' sentiment going forward, because it's an opportunity for them to partake in something bigger, which, to like Jude also rightly said, which should mean greater return in terms of dividend going forward, in terms of capital appreciation as well, because these banks are now, with bigger balance sheets, they're able to post, better figures going forward. I'll stop there. I think I hope I'm able to cover the question. Thank you.
You did. Thank you very much, Mr. Ade. Thank you for sharing those insights with us, very valuable insights. So Dr. Gbadebo, I'm going to turn back to you again. So for the non-financial services experts, can you please just elaborate, explain more why the rights issues and public offers are the primary method for raising funds? And also, just given the market dynamics and the CBN's mandates, do you think that this recapitalization will, these approaches of the rights issues and the public offers will suffice? Or do you think the banks will be exploring additional capital raising options?
Okay, thank you very much, Bianca. And so I think what has been popularized, or what is just from the issuances that come out, you've seen rights issues and you've seen public offers, and that's why we feel those are the only options. Yes, perhaps they're the most popular options because existing shareholders are your first point of call. So these shareholders, when you have existing shareholders, they're already invested in the bank. So if you're looking to raise capital, it's only natural that they're the first people you go to. They've been invested with you whether in the short term, in the medium term, or the long term, right? There are characteristics or there are features that they saw. There are things that interested them in investing in that bank, and that's why they've invested. They've benefited from investing in that bank, and that's why the bank or any bank that's trying to raise capital now, one of the first areas they'll look at is to say, let me consider opening this up to my existing shareholders, right? And now you have to also note that on the other side, the public offer as it is doesn't negate or doesn't stop existing shareholders from also investing. The only thing is that for a rights issue, it is targeted at existing shareholders. But in a public offer, you're opening up to the public, but an existing shareholders can still say, we want to invest. However, with a public offer, every bank is now able to, target a wider universe, right? If you think that, and most times banks will do that when they think that, look, my shareholders may not give me all that I need, or our shareholders may not be able to provide all the capital we need. So let's open it up to the larger market. But aside from those two, banks can also go through a private placement process where you call it a special placement, and there are rules and regulations around this where specialized investors or key investors now are able to provide this funding. There are certain regulations around how a public company being a bank being a public company can access funding through a private placement. But again, with the CBN regulations or CBN directive to raise capital, I think a lot of public banks can actually raise their private placements, but they need to get the relevant approval. And this is not all because this old directive is 20 years after, like as mentioned earlier. There was one in 2004, 2005. It's 20 years after, and we're doing another banking recapitalization. In the last time when we did 2004, 2005, we saw a number of banks, 89 banks went down to 25, if you remember. And that's because there were a lot of mergers, there were a lot of combinations, right? So a couple of acquisitions, and we call it mergers and acquisitions. And you want me to say non-financial, so I'll try not to use any word that is too technical. But what we're saying is some other banks can actually come together, right, to be able to meet these capital requirements. And in that sense, when two banks come together, their capital have been put together to form one bank, then they would be able to, meet those capital requirements of the CBN, right? We've seen some announcements regarding Unity and Providus merger, and we expect that further down the line, we may see some either acquisition or mergers, just like we saw in 2004, 2005. However, we don't think there will be as many as we saw then when you had 89 banks come down to 25. And the reasons because a number of these banks that we have currently are fairly strong compared to what we had 20 years ago, and they have a lot more options. So the international banks, yes, they have their international licenses. If they are not able to meet it, for example, they could scale down to national, and they will still retain, their banking licenses are national. But I doubt it, because a number of the internationals will all go out to raise their capital and meet it. But the national as well, could scale down to regional, so there are options. Those options did not exist then. But long story short, in addition to rights public offer, you could also have private placements. And with private placements, a number of strategic investors could be brought in, and you could also have a merger or an acquisition, wherein post the combination or post that transaction, the entity or the company that comes out after, would be able to meet the capital requirement of the CBN. I think that addresses that. Is there any other part to the question you asked?
No, thank you very much. That has sufficiently answered the question. So the public's offer and rights issues are the first line of defense. Then there's the private placements, and then of course the mergers and acquisitions as sort of like a last ditch attempt.
If I also add, and I know you're about to wrap up, right? We've only spoken about this in the domestic market, but you could also have raising capital in the international markets. So a number of banks will have global depository receipts, which we call GDRs, right? So the banks are not limited to raising capital only in Nigeria. Even though the capital that is being raised in Nigeria, we also have international investors actually invest as well. But it could also go to the international market through GDR issuance, global depository receipts, and some banks do have that. A number of banks in the Nigerian market have access to that market, but so far we haven't seen any access to the market for now, and that's because the Nigerian market is already robust enough from a capital perspective. You really look at it. On the other side, it's also already attractive enough to be able to attract. It's already strong enough to be able to attract funding, potential funding from outside of Nigeria.
Okay, well, thank you very much, Dr. Gbadebo. So Dr. Catherine, I wanted to ask you, how critical is the ongoing education and engagements with shareholders during these capital raising exercises, like the rights issues? Could you share any initiatives that Africa Prudential has undertaken to help shareholders understand their rights and the benefits of taking part in these offers?
Okay, thank you very much. I want to take us back to what happened at the 2004-2005 offers. Investors received documents that they didn't understand, and they completed them the way they felt. Okay, so you have instances where somebody has invested in shares, and under the address you have Lagos, and there is no phone number. This is why we have unclaimed dividend today. So what we are doing is to ensure that we don't have a repeat of what happened during those capitalization of 2004-2005. So speaking specifically about Africa Prudential, Africa Prudential has 6 banks that are involved in this recapitalization exercise. So we're a major stakeholder in this exercise. And what we have done is to, first of all, the moment CBN announced this directive, we had an internal engagement to look at how do we position ourselves, noting what has happened in the past to make sure that we'll help investors get good investment and they are happy. A lot of the generation of today are not investing in the capital market because they hear stories of their fathers who said we invested, we didn't get anything. So we are doing a lot to make sure that investors are happy after this exercise. All right. So what we have done is to create a portal. We have a shareholder portal called Inven that investors can use to access their data. This particular portal is customer-centric. It is a self-service portal. It is robust, right? Through these portals, investors will access their unique information from Africa Prudential database. This portal is also equipped with a community engagement platform for information sharing. As we speak, we have thousands of people who have signed on to this particular platform, and they are exchanging information, right? A lot of people have gotten to know more about the ongoing offers through this particular platform. And what else are we doing? In investor relations and engagement, one-on-one engagement. Every day, we send messages to all the people that will have their email addresses, bringing them to speed of what is going on, what they stand to benefit from our own understanding of the information in the market, telling them the position of the banks. When people are informed, they're in a position to make better decisions. So Africa Prudential is driving that. The shareholders of these 6 banks that we're managing are major beneficiaries of this particular information. And then other people that will have their data. Inven is constantly sending messages to them, allowing them to engage themselves. We have FAQs on that particular platform. People can send questions, and we have people dedicated that are answering this question. So we also use phone calls. We have a very, very robust customer relationship management application where people can send mail, people send questions, and it's equipped with a chatbot and some other artificial intelligence facilities that will help better engagement. So overall, we're expecting that we will have better offers this time around, and we're expecting that we will not have unclaimed dividends coming out of these offers. And with all this engagement that is going on, we expect that by the time the offers are completed, both the issuers and the investors will be happy.
Wow, fantastic. Thank you so much, Dr. Catherine. That's amazing that you're following up with people, email, phone call, etc. Because you're right. I know that when I was engaging my own community on this, people were saying, oh, you just go there and you fill the form and then nothing will happen and then you just will have the share. And we know that, in this day and age, that's just not the case. So that's very comforting. That's very good to know. Thank you very much. So Mr. Alade, the last questions from me before we jump to our audience, because I can see that the Q&A section, we have a lot of questions. Don't worry, we haven't forgotten you. We're getting to you next. But Mr. Alade, just before we go into our audience, I wanted to ask you, what practical tips would you offer investors when they are evaluating the rights issues and public offers? Because there are so many. So what factors should they consider when they're deciding to participate?
Thank you very much, Ibinka. I think at this point I should mention or I should emphasize the importance of investors reaching out to professional advisors for guidance when they are evaluating these various opportunities. The way they would approach their doctors for health-related advice, or a lawyer for legal matters, is the same way it's important that when it comes to investors, that they seek out guidance from their profession. Having said this, for rights issues and public offer, some of the tips or some of the key things that they need to look out for after some certain consideration is the fact that it's important that they analyze these investment opportunities and ensure that it fits into their investment objective, right? So let's not forget that these are long-term investments. It won't be wise if you are, deploying short-term fund to take up long-term investments. We've had instances where shareholders or investors, they pick up an IPO form, and 2 weeks later they're asking you, we're yet to see it in a CSS account. Meanwhile, for primary market issuance, it takes a while. After submission of the form, it gets to the registrar. I'm sure Dr. Catherine will confirm that there needs to be an allotment, they get SEC approval and all that before the account is credited. And this is just because they don't understand this form of investment before going into it. Because if you understand it better, you know that it's a longer term investment. The process takes its course before eventually appears in their investment account, and you now have access to trade as they deem fit. The second thing to analyze is, understanding the reason why these companies are raising money. This ongoing one in the market industry, we all know why they are doing it. Is a regulatory requirement that the CBN things would make sure that the banks are robust going forward, and they are able to support the government growth drive better, and able to also absorb shocks from bad loans and all what have you. The next thing for them to also check is the growth potential of this company, right? So if you are for right issue, you are talking to the converted. These are existing shareholders, they are already the owner of the company, so they know the companies, they've been with the company for a while. So they are not looking for much. They just want to support a company they already own to ensure that it maintains its financial stability. But for IPO, these are new investors probably coming into a new company, probably to diversify their portfolio or to enhance their portfolio return. So there are key things that they need to check. They need to check the growth potentials of this company. What have they done in the past? What sort of return have they been doing in terms of the dividend payout, their EPS? The kind, is it a company that pays dividend twice yearly or just once? Even in the banking industry, we have some banks that pays an interim dividend, pay final dividend, and we have some that only pays final dividend. So you have to analyze this vis-a-vis your expectation, your cash flow expectation, or your investment return, if it fits in. Once you've considered all these, then the pricing, the CEO of NGX rightly mentioned, right issues usually come to the market at a discount. We've seen one particular one come to the market in recent time at a premium, but normally right issue comes to the market at a discount. So when you are seeing the right price, you want to quickly check that against the market price to see if it is discounts or a premium, because this also has a bearing on your potential return in the future. Then the second thing to also consider that we've noticed during these ongoing exercise is to check for the accuracy of your right figure. We've seen instances where, because investors, they have multiple accounts at the registrar, when they pick up their right circular, or when that's been sent to them, the figures doesn't correlate with their expectation. So say you have 1,000 units of Zenith Bank shares, for instance. The rights issue ratio is, I think, 1:6. That should give you rights to buy additional 600 units of Zenith Bank. So if you get your rights circular, that's it's been sent to you, and you are seeing 400 units. Of course, that is not right, because your 200 is going to someone else, which might dilute your own interest in the company. So those are the few things that you need to check before taking these decisions. But like I mentioned, it is very, very important that you seek the guidance of professional advisors when it comes to taking up this opportunity. Thank you, Inka. I hope that covers the question.
Yes, it did. Thank you very, very much. That you added even some things to my own list as well. So thank you. Okay, so we are going to head over to the Q&A now from the audience. And actually, Mr. Alade, these first two questions, I'm going to direct them at you, because I think that this speaks to your expertise. So we have a question, actually question number one from Mr. Ayodele Ogundimu. Says, I bought some shares through the NGX platform, the rights issues and public offering. When will the shares bought reflect on my CSCS account and stockbroker records?
Okay, thank you, Binka. Like I mentioned earlier on, so I think there are processes. So I don't know what you said. You bought what again?
He bought some shares on the NGX
some
platform.
shares. Okay, he didn't give specific. So I know, like I mentioned earlier, Fidelity, Access, I think GTB, they've all closed. I think FCMB should close today. Once that happens, I'm sure by now they'll be with the registrars who will be doing some collation. Once that is done, I think they need to seek approval from SEC as well. After that, then the allotment will happen. And once the allotment happens, subsequently, the CSS account of these investors will be credited. But for IPO, it's quite different from the secondary market purchases, whereby it takes only 3 days. Just T plus, another the trading day plus 3 working days, and it's reflecting in your statement, CSS statement already. For IPO, it differs a little because of the regulatory processes that had to follow after the closure of the offer. So the investor should be right assured that at the end of this process, those issues purchased will reflect in his CSS account in due course.
Okay, thank you. Second question, like a follow-up question from Ayodele, says that the Zenith Bank dividend qualification date is the 13th of September. Do the shares bought through the public offer and the rights issue qualify for the dividend payments before the qualification date?
No,
They
no,
don't.
they don't. No,
Okay.
they don't. It's the
Okay.
principal shares that he already own that qualifies him for that right that will qualify. Subsequent financial year, reporting period, that means from the end of this year, I'm sure those new ones would have been added to the outstanding share issue on the floor of the exchange, and then from there on, they start qualifying for the subsequent dividend.
Okay, great. Thank you very much. So Dr. Catherine, I saw you shaking your head. There is a question actually directed at you from Arinze Obeta, saying that my question is to Dr. Catherine. If an investor buys shares at the primary market without a CSCS account, what happens if the investor wishes to sell after allotment?
Okay, one of the major requirements then is for an investor to get a stockbroking account. Yeah, because you require a stockbroking account to be able to sell. So one of the things that is going on is that even if an investor does not have an account now, during the offer process, an account is open for that investor through CSCS, because a lot of people don't have accounts in CSCS as we speak, and they cannot sell. So there is arrangement with CSCS, with all the platforms, to open account for investors. All they now need to do is to now go to a broker, regularize their documentation, and they will be able to sell. Yeah, thank you.
Okay, thank you very much, Dr. Catherine. So we have a question from an anonymous attendee. So I'm going to direct this to Dr. Gbadebo because you actually already answered this, or maybe the person didn't quite catch it. So anonymous attendee is asking, why is the rights issue and public offer the go-to strategy for capital raising? Are there any other strategies for capital raising that the banks or public companies can leverage?
Okay, thank you very much. And I think I'd answered it on my last question, but I think the additional thing, banks can also go, they can also raise capital through a private placement process. And that process allows them to access maybe from strategic investors, a select set of investors, but there are rules from the Securities and Exchange Commission that they need to follow, and those will be approved. So a private placement process is another process they can use to raise capital. Another approach to meeting the requirements, the capital requirements, is through mergers and acquisition. So for investors, please don't be worried if your bank, for example, is going through a merger process or is acquiring another, is being acquired by another bank, right? You don't lose your interest. It's just that the bank is, at the end of the day, the final entity is going to be able to meet the capital requirements of the Central Bank of Nigeria. So the real answer is the banks have to take an approach to meet the new capital base that has been set for their license level. They can either do it through raising capital, rights issue, public offer, private placement. I also mentioned that they can actually raise money in the international market through global depository receipts issuances. And as well, they could also undertake or be part of a merger and acquisition process that allows them eventually allows the eventual bank to meet the CBN requirements. Thank you.
Thank you, Dr. Gbadebo. So I hope that answers your question, anonymous attendee. So we have a question that I want to direct to Mr. Jude Chiemeka. Question says, what is the main function of the NGX platform? Is there an overlap with UCAP? Mr. Chiemeka, can you still hear me?
Yes, I can hear you. So the NGX platform in itself, NGX Invest, just allows investors to participate in these offerings by way of digital integration. So the banks, some of the banks have their own platforms, but at the end of the day, through their APIs, everything flushes into the NGX platform, because that's the SEC approved platform for digital offering in the market. And so it helps with a whole lot of things that happens afterwards. Some questions have been asked about whether you can share or get dividends from current offerings because you're participating in this offering. But at the end of the day, when the whole offering process is completed, and thanks to this digital platform, that process is shortened, the bank verification, then the new shares will be listed before they can then be eligible to start trading and gaining benefits from the dividends posted by the companies. So our own platform is the SEC-approved digital platform for digital offering, and it doesn't take away our trading license holders' participation in the market because we are a B2B as an exchange, so we'll provide a platform. We'll have trading license holders who generally, like United Capital Securities, that are B2C that deal directly with the clients. So, but at the end of the day, our platform is the, for lack of a better word, the master platform that will utilize to aggregate and collate all the offerings, and the whole process of verification will be done for the entire offering process. Thank you.
Okay, thank you very much, Mr. Chiemeka. Wow, so many questions. Okay, I'll take this question from Peter Shodipo, who has said, can the panelists educate us, the investors, on how we can trade our rights issues? Also, what are the guarantees that all units subscribed in the public offers will be allotted by the respective banks? Lastly, the long timeline in finalizing crediting shareholders' accounts after the closure date is also a major factor. So for this question, I think I'll direct it to Mr. Chiemeka and Dr. Nwosu, since you were both, this speaks to both of your expertises. So maybe Dr. Nwosu would like to go first, since Mr. Chiemeka just spoke.
Yeah,
Would you like
thank you very much. Okay, so the person is asking why it's taking long, right? When an offer closes, why does it take long? Okay, so the answer is...
Sorry, it's just also that, and also what is the guarantee that all units subscribed in the public offers will be allotted, which you've already spoken to, but...
Okay, so addressing that, everything depends on how the offer turns out to be. I mentioned about oversubscription. Okay, so if a particular offer is oversubscribed, the bank has the privilege of going back to the regulator to say, okay, I came out with this volume as the shares I want to take. Now I have this. Can you permit me to take additional? To take more than what I initially intended. So the regulator will have to look at all the dynamics and know whether they can approve an extension. And that's for public offer. So if they do, investors may get everything they have applied for. So if it is oversubscribed and not everything will be allotted, shareholders will get return money for the excess. They'll get return money for the excess, but the guarantee is that every shareholder who have applied for something will get something, right? If it comes to right issue, so long as you take up your right, you must get what you have applied for. Your right is your right, and no one can take it away from you so long as that offer is successful. So for right issue investors, your rights that you have paid for, you will get it in full. If you apply for additional, it depends on if other people do not take up their rights. That is when the additional shares you've asked for can be allotted to you. So coming to the timeline, Dr. Gbadebo mentioned that when the offer closes, you know, the reporting, the collation, and everything will happen. And it's at that point that the report is now taken to the regulator to look at, right? The regulator will now look at everything and then approve the offer. It is when the offer is approved that it will be credited to the depository. Once you have the approval, it doesn't take more than 2 weeks to get it credited. So yes, just a little patience after the closure. And the regulator has promised that the timeline for approval will be very, very short. So it won't be like in the past. I can assure investors. Thank you.
Thank you very much, Dr. Nwosu. So we have a question that I would like to direct to Dr. Gbadebo from Yerima Tafa. So she says, or this person says, with respect to risk equity financing and looking at the performance of the economy in Nigeria, what are future prospects for an investor? That's an interesting question.
With respect to risk equity financing.
Risk in
Okay.
equity financing. So I
Risk
think
in
this,
equity financing. What are the future prospects? Please complete the question.
so with respect to risk in equity financing and just looking at the general economy in Nigeria, she's asking what are the prospects for a future investor?
Okay, and it's a fair question, but you should also know that this is equity investing. One, equity investing is generally long term, ideally long term, right? And also where equity sits, it's a residual interest you own in the company you're investing in. So all other stakeholders, debt providers will be paid, is the residual that gets to the equity investor. But again, equity investors are typically long-term investors, right? You're looking at the outlook of the macro situation, of the sector, of the company itself, of the bank itself in this case, right? It's the same way you assess maybe other companies, the same way you assess this bank you're looking at investing in. You need to be able to look at how has this bank performed in the past? What is their strategy right now for the future? You know, when I spoke earlier, I spoke about the fact that the documentation that we prepare will contain information on, you know, who makes up the bank, the board, the management, their plans, and how they're going to use this money, what's their view about the future. And then you put all those together and then take a call in investing. Your question, I think your question to me is, if you look at all of that you're asking me for guidance. I've given some guidance earlier to say that Nigerian banks are actually well run, well regulated. Sometimes we're inside, we don't see exactly what we're doing. We've come 20 years without a need for recapitalization. We're doing this recapitalization after 2004, 2005. Permit me to also say that some countries are also looking at this recapitalization. Some countries looked at what we did in 2004, 2005 to also follow on their own recapitalization. Some countries have looked at how our financial services industries has actually evolved, right? Nigerian banks are so strong. If you remember some years back, they started expanding outside of Africa, and a number of them have their footprints across a number of countries in Africa. So the banking industry in Nigeria is actually quite strong. And I guess you still need to do your diligence. You still need to look at each of the companies one by one and look at and take your call. But on a broad level, perhaps you say that the country is going through some challenging period at this moment. But again, it's not something that is out of the ordinary. A lot of other countries too have gone through this kind of challenges and have come out of them. And we also believe that we will come out of this. Our banking industry is perhaps one of our strongest sectors. It has weathered the storm in many ways. It's a very key part of our economy, and it's actually goes beyond outside of Nigeria. So a lot of those banks, like I mentioned, actually operates in countries outside of Nigeria. So it's essentially you are investing in diversified entities whose and you know, one of the hallmarks of 21st century portfolio management is diversification, right? So just your investments in these banks, especially those that are well diversified, right, already is a diversified investment on its own. So I think the answer, I can't give you 100% of the answer. You have to look at each opportunity on a case by case, but on a broad level, the outlook is positive for the Nigerian environment, especially for the financial services sector. And then it's now a case of the specific bank you're looking at, and then I think that does it for that question. But still, it's equity, so it's a risky investment. So you have to look at you look at this opportunity all through, do your diligence appropriately.
Yeah, I completely agree. Thank you very much, Dr. Gbadebo. So I see an interesting question, which I think a lot of people actually have this problem. So Dr. Catherine, I'm going to direct this to you. It's from Samuel, who is saying, I have a couple of CSCS accounts issued to me during the process of different company shares. Is there a way to merge all of this into one? And secondly, what happens if the CSCS details I provided during a share process was wrong?
Thank you very much for that question. Having multiple CHM accounts is what we experience in this market. But the advice is that the investor should contact a stockbroker so that he can merge them and have one. The market is encouraging investors to have just one clearinghouse number, okay? One clearinghouse number per investor, but you can have multiple account numbers with your stockbrokers. That's not a problem. And from the registrar's side, it doesn't affect you in receiving of your benefit. Okay, so that's the question on merger. If you provided a wrong clearinghouse number, if they try to process it, it will fail, but it will be regularized. If it is possible for the registrar to resolve it internally, they will resolve it internally and credit you. But where it's not possible, they will reach out to you. That is why a lot of engagement is going on this offer, so that people can provide at least their functional phone numbers, right? And email addresses where applicable, so that if there are issues with your offer, they can quickly contact you and resolve it timely.
Okay, thank you very much, Dr. Nwosu. I have a question that I'm going to direct to Mr. Alade. It's from Sylvester, who says, good morning and many thanks to the organizers of this webinar. The question is, can you guide me on the basic consideration when buying shares? I recently bought shares with one of the banks without knowing the nitty-gritty of how it works. I was driven by my desire to invest without knowing what to do or consider before buying a share. Please guide. So Abedin, you actually touched on this, whilst you were speaking earlier. So that's why I wanted to direct the question to you again. Okay.
Thank you very much, Ibinka. I think the first place to start this conversation is the investor's objective. So what is the investment's objective? Is it a long-term investment? Is it for short-term saving? Are you buying, just investing in different sector? Are you targeting the banking sector in particular? So if your target is long-term investments, the target is the banking sector, then you now need to drill down into, the top guys in that particular industry based on their historic performance. These are factors that would guide you, into making a particular decision. We've seen instances where people invest because, their friends or family members, have told them about investment and how they've made a lot of money from it without actually, situating that to their own investment objective and if it actually fits in, right? But just like Dr. Bayo earlier mentioned, the banking industry in our capital market is very, very strong, very, very strong. And I still think they are currently undervalued. If you look at some ratios compared to other clients, you would understand what I'm saying. But without going too technical, like I mentioned, I just think it's very, very important that before anyone starts investing, that you speak with a financial advisor, because your objective, the time horizon of that money that you want to invest would at times determine the kind of opportunity the advisor will ask you to go for. Thank you.
Thank you very, very much. Mr. Chiemeka, are you still on the call with us? There's a question here directed to the NGX that I wanted to send your way.
Yes.
Okay, thank you, sir. So the question says, good morning, everyone. I appreciate the United Capital team for putting this together. My question is why the prices of the rights offer are sometimes different to the prices of what we see on the NGX. Sometimes the rights offer is higher than the price in the NGX. The regulators need to look into this going forward. This question is from Mrs. Bisi Bakari.
All right, thank you. I'm not sure the reference price the Mrs. Bakari is referencing, but for the purposes of the offer, the price is stated and it's as approved by the SEC. So on all platforms, the price should be the same. But in the course of the conversation, we have talked about secondary market trading. So away from the rise price or the offer price, the stock already has a price if it's listed. In the case of the banks, most of them are listed, so they already have a price. And is that trading price that is the secondary market price that you find on the daily official list of the NGX. Obviously, that price itself keeps changing, just depending on the market demand and supply and other dynamics. But the offer price is as stated by and approved by the SEC. So that's the difference. I'm not sure whether she's referencing the secondary market price, but the offer price for an offer is the same. It's that price is approved by the SEC and is the same on all platforms. Thank you.
Thank you very much, Mr. Chiemeka. So before we completely wrap up the Q&A, we had a lot of questions, but time is of the essence, and we are in danger of being over time. Mr. Alade, can you please just help us with advising the attendees on how they can actually go about purchasing the shares of the different banks through the rights issue and the public offers? Because that's quite a few of the questions here is how can I do it?
Thank you very much, Ibinka. I think we can take this conversation further at United Capital. They can reach us at United Capital PLC Group / bank shares, or via email, that's our website, or via email at securities at United Capital PLC Group.com. For them to to partake in this particular offer. I think the first thing for the new investors is the CSS account, and they can get set up by reaching us through any of those channels that I mentioned earlier on. Once you have a CSS account, then you have a CHN number, then you are good to go on most of this offer. Mr. Jude Chiamaka also mentioned with the exchange initiative, with the technology for this ongoing offer, you can connect into that through any of those channels. And once you have a CSS account, then you are basically that's what you need. You need a CHN number, you need a BVN number, you need a bank account, and once you have all those, then you are good to go. Of course, for rights issues, that is only open for existing shareholders. If you are not an existing shareholder of the bank, you can't partake in the rights issue. But for the banks doing a combination of the rights issue and a public offer, then you have access to partake in the public offer by getting yourself a CHN number, so to speak. And of course, I know most of the investors on the call, we all have bank accounts and BVN. So with those three numbers, and I think you're good to go, Rika. Thank you.
Thank you very, very much, Abidin. So for everybody who's joined us on Zoom and on YouTube, just wanted to let you know that all the questions we didn't get to answer whilst on this call will be answered in an email that will be sent out after the session. So as we wrap up, thank you to our distinguished panelists and our guest speaker, Mr. Chiemeka. I would like to hand over to Mr. Bawo Orisha-Jafo for the closing remarks.
Thank you once again, Ibinka. This session has turned out to be a very insightful one for us today. Distinguished guest speakers and valued participants, as we conclude today's webinar, I want to extend our deepest appreciation to everyone who contributed to making this event a success. First and foremost, we are incredibly grateful to our distinguished guest speaker, Mr. Jude Chiemeka, the CEO of the exchange, for sharing your profound insights into the Nigerian capital market on the ongoing banking recapitalization efforts. I would also like to acknowledge and thank our senior panelists, Dr. Gbadebo Aderele, Dr. Catherine Nwosu, and Mr. Abidin Alade. Your diverse perspective and expertise have greatly enriched today's dialogue, offering a comprehensive understanding of the right issues and public offers currently shaping the financial sector. To our engaged audience and participants, your active involvement and thoughtful questions have been crucial in driving a meaningful and dynamic conversation. Your commitment to understand these vital financial topics is commendable, and it reinforces the collective goal of advancing financial literacy and strategic investment practices. At United Capital Securities Limited, we are dedicated to providing platforms like this to facilitate informed discussions and promote financial empowerment. Thank you once again for your participation and for contributing to the success of this webinar. We look forward to your continued engagement and to seeing you at future events. Wishing you all a continued success and prosperity. Thank you. And bye for that.
Okay, thank you, Mr. Arisha. Thank you to every single person that joined on YouTube, on Zoom, for taking time out. So essentially, the summary of all of this is that you really should not be standing on the sidelines in this event. This is not something that happens every day in Nigeria. So as Mr. Alade has said, if you need to go and consult a financial advisor to advise you on, which of these rights offers to go for, if you want to open a brokerage account and go for it, please do. If you have any other questions, the very able team at United Capital are there to help you. You can email them. They've given the email and they will be emailing you after the session. So have a great day and a great week, everybody. Goodbye.
Bye, Yinka. Thank you.